What is going on, Alpha Hunters? Hope everybody is having a tubular Thursday. All right, gnarly if you're in California. Hopefully you're having a great day. This is going to be a little bit different because I'm going to be gone on Friday. So I'm going to actually do the Market Outlook weekend video and I'll do like a little midday snapshot. So it might be a little bit longer than my normal midday snapshot, but I'll probably try to incorporate as much of it as I can here. So nice gap up on the market today on the SPY. What do we gap up? Roughly 0.25%, a little bit over. Kind of nice little pullback there for the first hour. Nice little push higher for an hour. Kind of nice. Pullback, push higher. Kind of choppy. Little flat top here. Sideways action. Was that about an hour and a half or so. And then we got a drop here. Okay. And I'm going to talk a little bit more about this, but this drop comes in line with, or about the same time as, well, the 30-year auction was going on for treasury yields, or the treasury bonds. And yields were basically just rocketing higher. And so we are continuing to see, the market have this little bit of a sell down. So yeah, we dropped very quickly there. Apparently there was not many buyers on the 30-year at whatever, interest rate they were basically trying to sell them at. So that's why yields started really, pushing higher, kind of across the board. I didn't really look at the short term, like the 2-year, so we can take a look at those. But the 10-year was definitely jumping higher. I'm sure the 20 and 30 are definitely a lot higher as well. So yeah, we had an initial drop, a little bit of a retest, and then obviously over here over the past 30 minutes, definitely rolling lower. So let's take a look, see how the Qs are doing. Qs, nice little midday high here. The SPY didn't quite make this high. Other than that, kind of looks like it. Didn't have as much of a pullback either on the initial start of the day. IWM down over 1%. It's kind of been a theme for the week for the IWMs. Been down like 1%. I think every day, except for maybe yesterday on Wednesday. So IWM, nice little gap higher. But yeah, it kind of just been trending down most of the day. I mean, this is after, it's down over 1% and it gapped up 0.65% here on the SPY, or on the IWM, apologies. Yeah, so nice little pullback there for the first hour. Sideways there for about 2.5 hours there. And then we got to the 30-year auction. You can see what's kind of going on there with the IWM. DIA, also nice little gap up, pullback, a little bit of a pop, flat top, 30-year auction, drop, okay. RSP, also pullback, kind of sideways, and roll over. All right, so one thing that I'm not going to be able to do this week is I'm not going to be able to do the week-over-week options change because I won't be here tomorrow, so I really won't even be getting back till late Sunday night. So I'll get that data Sunday night, and if there's anything crazy, I'll send out a screenshot of it on Twitter or post it in Discord. And if but the data will be updated correctly next week as well. So the SPY did take out this daily high back from October 17th this morning on a gap up. Trying to see here. So the low back from September 20th is 438.43. The high of today, 438.47. The SPY filled this gap. Filled that gap, which open high. So the open filled the gap. It was at 438.43, which was that low here, and but we did push up 4 pennies for a little bit of an upper wick. You can't even barely see it, but so yeah, just so you know, we did fill this gap here. Qs obviously took out this high for yesterday. I believe they took out that high yesterday. Let's see, that high is 373.74. Yeah, they took it out by 5 pennies yesterday. That's right. And then obviously clearly getting above it today. So, okay, interesting. IWM, yeah, been fading the whole week. That's what I mean. But You know, down 1.25% on Monday. Tuesday we're actually down 0.35%, but they actually traded down 1% at one point. Yesterday they actually closed the day down 1%. So the IWM here not looking good, down 1.3% currently. Yeah, just looked like a really quick snapback retest there. And not much else to say about that. All right, DIA, yep. Kind of mentioned, you definitely want to see it get through 345 here. Nice little drop here. Okay. I kind of want to get the yields because but I want to run through this just to make sure we're looking normal here. It's going to be kind of interesting here on the RSP, kind of coming into the 10 and 20 moving averages here, kind of sandwiched here. But we didn't get close to taking out this high, so I'd imagine we probably do get below the 10 and 20, probably fade down. We do have this open gap down here. Pretty large open gap, so maybe we come down and feel that, or maybe we just continue to push lower. All right, so big tech is still outperforming, even though we're seeing a lot of red on the market. That's nothing new, I guess. VIX ticking higher, probably mostly over the past, what, 20 minutes or so, or an hour, I guess. About an hour ago. Yeah, you can see the VIX started climbing about an hour ago. What I didn't like about the VIX is how much the VIX dropped off here. This is a lot of room. So if we start rolling over bearish on the market, I mean, the VIX has a long way to go to get back up to these highs around 22, 23. So if the SPY starts dropping off here over the next couple of weeks, I mean, I'd be really curious to see just how far the VIX has to go to get to kind of match that move, I guess. So I didn't really like how you know, how quickly the VIX got below these lows here back from October, and the SPY barely climbed up over that high, you know, this morning. So yeah, that the VIX move just tells me that we could see some bearishness and people wouldn't be in panic mode. That's what that says to me. Okay, so the dollar, obviously, dollar yields going higher, kind of correlate, and you can see pretty good here. Nice spike right here, about the 30-year Treasury auction time. Pull back and then push higher here over the past couple of minutes. This, you know, I was watching this earlier in the day, and I was going to say this on a live stream. We were having a pretty large upper wick on the day, you know, up to here. This was earlier in the day, and we had kind of come down pretty good this morning. But so we were kind of having two upper wicks. But what I was going to say this morning, or what I would have said if we didn't have this move that we've had over the past hour, is you want to see the DXY drop off. You need to see this DXY drop off here very soon. I would actually be bullish on the dollar here. I would be bullish on the dollar here. You got the retest. You were getting the rollover this morning, but it wasn't like dropping off. You wanted to see it get back down below, you know, Tuesday's low, that kind of action. We weren't quite doing that. We weren't dropping off super hard yet. And then obviously with the auction, the 30-year auction, you can see it's really bounced back. So this kind of says I think we're going to see the dollar go higher. Maybe it consolidates maybe another day or two and then pushes higher. But this says to me, okay, we got the retest. We were starting to roll over, and then it bounced back very much like this time period, right? We got the breakdown, we retested, we were rolling over, and then we got that bounce, right? We got that immediate snap, and that's kind of like what happened here. I mean, if we just go to an hourly time frame, it might even make a little bit more sense. So we got the breakdown, we got that retest, we were rolling over. You can see it this morning, we were rolling over there for a couple hours. Even this nice little consolidation here that we had over the past couple days, broke that, and then we snapped back higher. We even trended higher before that 30-year auction came up. So yeah, dollar looking sneaky bullish here, sneaky bullish. GLD actually up. Dollars up. GLD hasn't fallen off. It's probably down from the highs because over the past hour, GLD rolling over a little bit. Okay. Surprised GLD is as strong as it is today, but it is what it is. 10-year yield. Let's talk about yields. All right, so let's talk about yields. So this very much looks like the dollar, right? You had that breakdown, you had the retest, you had the rollover. What's interesting about this rollover? So we didn't hold below this low on Friday. We had this lower wick. We rolled lower this week. We actually closed below it, here on Wednesday. What's really interesting about this wick that we got last Friday is we actually got below that wick today. Right, today. Well, I guess it would have been like last night's trading, but you can see it right there. Kind of got below it a little bit, and then we started climbing higher. And we started climbing higher well before that 30-year. Well before that 30-year auction. But it looks like it's starting to consolidate here. Maybe we push higher here over the next day or two. Because, yeah, the 30-year, if nobody's buying treasuries because they don't like the current interest rates, then yeah, then we're going to see interest rates go higher, and that's going to put a lot of pressure on equities, and a lot of pressure is going to come back on equities. And what have equities done here over the past week and a half? Well, they've absolutely ripped it to the bullish side, and is it overdone? Like, that's going to be the question. 30-year, you can see 30-year is actually up almost 4%. It's been up 4% on the day. That is a crazy strong move there. Yeah, it's been up 4.5% on the day. I mean, that looks really strong there for the 30-year. You can see just how strong that looks. So, yeah, 30-year looking pretty good there. 2-year, how's the short term? 2 years bouncing. Look at that. 2 years bouncing pretty good. Getting above Friday. Okay, so getting above Friday there. Had a little bit more of a longer pullback from mid-October down. 10-year yield, not as much. It was trying to consolidate, and then it broke down last week. But yeah, it looks pretty strong to be going higher. I think kind of mentioned this before. I don't know if we're going to have a recession. I think yields and interest rates are going to continue to be putting pressure on asset values, equities, and other things, home prices, that kind of stuff. And as long as yields and interest rates continue to push higher, people are going to have to devalue equities and those kinds of things even more. So I know a lot of investors, that are bullish, what they talk about is, inflation's coming down, so we're going to see, Fed cut rates, and it's like that doesn't work that way. And now that, interest rates are going higher, are we going to see the market kind of respond that, okay, we will have higher for longer rates and interest rates and that kind of stuff. So it's going to be very interesting to kind of see that play out. But yeah, yields doing some good climbing today. 10 and 2 inversion kind of got back down to this low. Be interesting to see how this sets up. I was really kind of surprised at how much it pulled back here. And yeah, 10 and 2 inversion bouncing a little bit here today. HYG pulling back makes sense as bond yields are jumping pretty good. LQD dropping off there as well. So HYG, LQD dropping off. I'm going to imagine TLT is dropping off pretty good there as well. Okay. Okay. So yeah, I would definitely be keeping an eye on yields. Like, that's where I would be keeping an eye. I mean, I know I sound like a broken record because I say that a lot, but if yields go back to pushing back up to these upper 4% area, up to the 5, getting close to the 5% area, and the market's not rolling over, getting trashed, I'd imagine yields are just going to go higher. So, Yeah, I mean that's it. Everybody was super quick to pull the trigger to be bullish here, right? To be bullish. I mean, look at that move, and it wasn't like we got a monster breakdown in yields last week. And I mean, this is off of an uptrend. So I don't know. I'm not one to say that, you know, it's all great and potatoes. One of the big reasons why I do think we will see lower equities has to do not with growth. It doesn't have anything to do with growth. It just has to do with valuations and how you value equities and cash flow. Anything with cash flow is by interest rates. And if interest rates are going higher, then that just devalues assets, which equities are assets, right? So, and the biggest way you actually value equities is by cash flows. So, how much you discount the cash flows back to today's value. So, yeah, that's just kind of my take on it, and that'll be an interesting look here going forward. If we do get some pullback here over the next couple of days, some consolidation, and rates can still probably push higher. You know, watching that 10-year, if it's still kind of pushing higher, look like it's going to push higher, I would be a little bit more protective on that. I like the gap fill that we got this morning, but I would be more willing that we probably just slowly pull back here throughout the month of November as we go into December. I know it's still kind of early in the month of November, but that might have been the high of November right there on the SPY at least. As far as sentiment survey, check this out. Kind of mentioned this last week with how much bullishness we were seeing through Thursday last week. Look at that bullish climb right there. Woo! All that bullishness that came in. That screen is bright, by the way. I like dark screens, man. Every website should have a dark screen. But that is a huge climb on bullishness, and I think the rapid change into bullishness is another reason why I probably just wouldn't be leaning bullish. So, yeah, last week was very strong, but I don't think we really solved any of the problems on yields. I think the thing that's going to continue to put pressure on the market in equities. Let's take a look at sector rotation for the day. We'll take a look at sector rotation then for the week. Since I won't be on the live stream tomorrow, we can take a look at that. So here's sector rotation for the day. Healthcare is getting hit. Discretionary is getting hit. So Tesla got downgraded. I don't know if you saw that. We can take a look at some of those tech stocks. Real estate, utilities, materials in line with the market. Staples kind of underperformed early on, but hasn't really like sold down too much. A little bit of outperformance here recently. Financials, a little outperforming there. Tech, industrials, energies, and communications, XLC, they're outperforming. Okay. So if you take out the gap, how are we doing? Discretionary is at the lower end of the day. Utilities, real estate, healthcare, everything's starting to get trashed right now. Materials, okay. Financials and energies kind of in line with the market. XLC, communications, industrials, staples, and tech all outperforming on the intraday. All right. Very interesting look. Let me let's take a look at how the week has gone. So this is how the week has gone. Obviously, tech makes perfect sense. There's a lot of things getting thrashed this week, but the Qs and big tech continue just to grind higher. XLK, I would imagine they probably do end out this Friday as the best performing sector on the market, just because I don't think there's any big tech earnings tonight or tomorrow morning that would really change that in any way. Everything else looks like negative. That's the concerning part, is like everything's being held up by big tech, and that doesn't even have, which basically that's semiconductors in the XLK and Microsoft and Apple. So yeah, that's about That's about the biggest reasons why XLK is actually doing pretty good. And Microsoft actually was killing it this week. Actually, Microsoft and Apple have both been killing it this week. XLC kind of in line with the market currently. Industrials, staples, financials, discretionaries, healthcare, materials, utilities, real estate, and energies. And look at that. Energies are down 4.5% so far in the week. Real estate's down 3%. Utilities down almost 3%. XLB materials down like 2.5% on the week. Like, it's crazy. Like, if you take out tech, I mean, I would bet the SPY is probably down maybe 1% on the week. Actually, we can kind of do that. We can normalize it by looking at the RSP. How much is the RSP down for the week? Hold on, give me a sec. There we go. So the RSP down about 1.8% for the week. So that's kind of how you normalize it out. Just look at the RSP. Oh, let me get off these lines. So take a look at these weekly charts. Yeah, last week just looked so stinking bullish. But the RSP is down 1.6%. Yeah, if you take out tech, man, it really hasn't been all that great. The Dow Jones actually down 0.4% for the week. Probably a lot of that's due today. IWM looks like it's going to try and make a run to maybe bearish engulf last week's massive bullishness. That would be absolutely hilarious if it did that. And it would need to drop 2.4% by the end of the day on Friday. So one more trading day in about 1.5 hours. That would be interesting if that happened. The Qs, yep, the only sector here, or the only major ETF here positive for the week. And the SPY is actually flat for the week. All right.